Hello everyone, today is Tuesday, June 30th, 2020. My name is Evan and welcome back to another midweek market recap video. So we're going to jump right into our dashboard here. Stocks closed the day strongly to the upside. This was month-end, quarter-end, second quarter closing prices here today. So you can see a nice kind of rally surge into the final day of quarter two. All of the major indices up anywhere about 1 to 2%, led by the Qs. Dow Jones lagging just a little bit. The 5-day change numbers still mostly negative here. You can see that the Russell 2000 is trying to inch itself back up into positive territory, but it was a rough last week for the market. We, clawed back some of those losses, but still over the past 5 days are a bit negative. In terms of major indices versus some of those key simple moving averages, we're almost above the 10 across the board. Just the Dow is lagging a little bit. We're above the 50 SMA, and we have a mixed picture here in regards to the 200 period simple moving average. Now, if we look at sectors here, a much sort of more bleak story, but again, this goes to show the 5-day performance has been, again, mostly negative here. Materials out in front is the only sector here eking out just a marginal gain over the past 5 days, followed by real estate and tech. And on the downside, we have energy, we have communication services, and financials. Now, in terms of major markets, we had a big move in natural gas, so that is at the top of the list, followed by TLT and silver. And then on the downside, we saw some unwind in VIX, volatility, oil, and emerging markets. So that's sort of the landscape that we're looking at midweek here. Let's jump into the charts. And I actually want to start with just a quick overview of the quarterly picture. So what we're looking at here are quarterly bars. So basically, quarter one for the stock market, if we look in the top left for the S&P 500, we were down 20% coming into 2020 at the close of March. And you can see on this quarter's bar, we rebounded 80% of it. 75% of those losses were recovered. We lost 20% in the first quarter. We rallied 19.63% in the second quarter. But remember, if you're down 20%, you need more than 20% to get back to break even. But you can see, regardless here, the stock market did a pretty fantastic job at recovering the majority of that opening drive lower. Now, if we look here at the Nasdaq top right, you can see a much different picture here. We have exceeded last quarter's closing prices, highs, and opening. You can see we surged 29% this quarter here for the Nasdaq. We were only down 10% in the first quarter by the close of March. So you can see some great progress moving to the upside here and just continuing the strong march higher. If we look at the Russell 2000, bottom left here, you can see again, this is kind of the bleakest picture out of all of them. We closed down 31% in the first quarter. We've rebounded 25%, still have a ways to go to get back to break even. And if you want to look at international markets down here, they were down 23% in the first quarter, rebounded 14%. One other comment I want to make here, if we look at the top right, you can look at any of the markets here, but look at the Nasdaq since the 09 lows on this run that it's had up, and just look at the size of these bars that you're seeing here. Look at this volatility expansion in ranges over the past year or so, really going all the way back to 2018, the end of 2018, that last quarter when stocks had that violent kind of move to the downside on recessionary fears. Ever since that point, we've really seen these ranges expand here, and it'll be interesting to see how this how this continues into the future here, because we know that these high volatility zones can be quite dangerous when they're not moving to the upside. So something to pay attention to. But that's the quarterly look. Let's drill it down a little bit tighter here. Let's go down to a daily chart now with our usual smart trend filters indicators is added to these charts. We're looking at a daily picture of everything, and the standout here, if we start with the top left, which again is the S&P 500, notice we talked about the fact that the trend started to turn down last week. So on Friday, we were getting our first print here of a bearish transition of trend using our indicator. It was the first time that this has happened since April. Of course, if we zoom back even further, it ended up capturing the nice kind of February, March meltdown pretty early and, accurately. When we look here at this most recent action now, you can see that it had 2 days of bearish activity, but after today's close, you can see we're back up to the neutral sort of transition state. So this here is basically telling us that, some of that weakness we saw last week, we didn't get that follow through. The bears didn't persist, and markets are now kind of in a spot where the bulls, can't clearly call victory right now, but the sellers don't really have the momentum either. So we're in this mixed sideways transition state, and that's currently the latest reading for the S&P 500 daily time frame. So we're back to neutral here. We're still moving sideways, and we'll have to see how this week finishes up. It's a short week because we do have the 4th of July Independence Day holiday on Friday. Markets are closed, so we only have 4 days worth of trading here, but so far with this early week rebound, we have moved back up here in terms of the smart trend filter on the daily, and jury's out right now on the next bigger direction. If we look at the Nasdaq here, this is still in transition. This never turned down last week, so we're still just kind of transitioning with the prior context being an uptrend. Bottom left, Russell 2000, you can see again this moved back to neutral as well. We started last week on Thursday with the bearish transition. Friday was the second day, and then Monday was when this one turned up, because Monday the Russell 2000 saw a pretty sharp move to the upside to kick off this week. It outperformed the rest of the market, up 3% on Monday. So this moved it back up into neutral, got some follow through back here today as well. Notice with both of these, S&P and Russell, the trend filter here is very sideways, which again just speaks to the indecision that you're seeing right now in this market. If we look in the bottom right, we do have actually something that's still printing a bear trend right now, and this is the ACWX. This is international markets, and this actually flipped late here. This flipped this week on Monday. This went bearish. It stayed bearish here on Tuesday. So we're starting to see, after a decent stretch of outperformance or of relative strength in international stocks, we're starting to see that kind of break down a little bit and potentially roll back over in the other direction. So we still have that right now to pay attention to on the downside. So if we actually just take a look now at some of this price action here in the S&P 500, and we start to put some levels to it, we'll go to this roadmap here that we've been looking at. We can really, looking at a candlestick view here, this again kind of paints this clear picture of chop and transition, because if you look here over the past basically 1 month of trading, we've gone totally sideways here in the S&P 500 right around this 3,100 level. We have managed to hold the lower end of this range around 3,000, and the upper end of the range around 3,140 is still intact. So these are the levels that we've been talking about for the past couple of weeks. These shouldn't be new levels to us, and the market is so far comfortably just trading within this range. In fact, it's basically in the dead center of this range right now, working its way to the upside. So going forward, going into the end of the week, again, we're still looking for really a breakout over 3,140 or a breakdown below 3,000. Our trend filters kind of moving to the bearish side last week. We're suggesting that maybe we would have gotten the breakdown. It managed to hold so far, and we've got the pop back up into here. So that's effectively what we're waiting for. There's really not too much else to add here. It's a sideways market in the short term, and we're waiting for some of that vol expansion to potentially take us out of there. The Russell 2000, pretty similar here. We're talking about, this consolidation, this orderly consolidation we talked about last week as well. Notice the fact this put in, maybe a slightly higher low here if you want to just kind of market versus the low that we saw back here on the 15th of June. You can see that we did not come all the way back down, but we put in a minor sort of higher low there, and we're trying to work ourselves back up into this range. We filled this gap, and getting back over 144, 145 area would be a good start, would be a good win for the bulls to sort of reclaim some momentum and break out of some prior levels. But the Russell here is still very much clearly in a sideways holding pattern, just the same as the SPY. And then the Nasdaq 100, as we've known here, has been doing much better than the rest of the market. It was trading just a few percentage points off of its all-time highs. It had a good session here. It had a turnaround day on Monday, had some follow through to the upside, and we're nearly back at all-time closing highs here for the Nasdaq 100. So again, mostly sideways for the Nasdaq over the past 3 weeks worth of trading, but still very close to its all-time highs, which is a much different story than the Russell and the S&P 500. So that's really the landscape there in terms of markets. Those are some of the intra-week developments. If we look at some of the other markets here, I don't really have too much else to add. Credit markets, we'll leave that alone until the end of the week. If we look at VIX here, you can see VIX is rolling over. It closed back around 30, but notice we're still in a transition mode here with our trend filter, so we're waiting to see how that ends up playing itself out. Gold and silver also now continuing to work to the upside, having some strong days here, especially silver. So let's go into some of the individual charts just to mention a few of those. So if we look at VIX real quick, that's not VIX. Let's try to get VIX again. Here it is. So if we look at VIX, we closed down around 30 here on the session, pretty close to the session lows. This has been a spot that the VIX has basically been above since it had this big 50% surge back in this first week, second week of June. Back on this day here, we've been holding over and closing over a 30 VIX. That's still the case right now. Things are looking a little bit weak, looking like maybe it's ready for the rollover again, but still for now, bulls aren't really letting this go back below that key psychological 30 level. We'll see how this holiday shortened week follows up, and especially the dynamics I think will be interesting just after the quarter end. Month end, quarter end, there can be lots of markup and sort of manufactured rebalancing going on in funds. So we'll see how all of this kind of shakes out to close out the week here on Thursday. But VIX here back to that key level. I had a couple of other sector ETFs on the list here, which was XLV was one of them. This was because this again had a bearish trend filter transition last week, which is now moved back up into the neutral state here. So I think if we were to look at this view here, you can see it went bearish last week back here on Thursday, and then it moved back up on Tuesday's session here, which is today's session. Same thing for XLB. XLB also went bearish last week on Thursday. Friday and Monday it was bearish. Today starting to lift back to the upside. Based on some of this recent strength. So that I think is it. I think that's about all the tickers I had to go over today. Couple of transition points, market in rally mode here. Bigger picture, still need more conviction and momentum to resolve those ranges to the upside, but at least that immediate worry of rolling over and picking up that momentum to the downside seems to have evaporated, and we'll kind of see how it shakes out into the week's end. So that's what I got for the midweek. Thanks as always for tuning in and watching. Every Tuesday we do the little snapshot videos like this. Fridays are long form analysis, and Wednesdays, which is tomorrow, we'll look at some trade ideas with some individual stocks. So thanks so much. You can subscribe on our YouTube to stay up to date, or follow us at The Trade Risk. Have a great rest of your day, and we'll see you back here tomorrow.